They lied to you about Nigerian stocks. If you're Nigerian and you mention the stock market to someone above 40, watch their face change. They'll tell you about the money they lost, the shares that never paid, the broker who disappeared, the dividends that never came. And honestly, they're not wrong to be angry. But here's the problem. They're blaming the wrong thing. Because the NGX didn't steal from them. The stock market didn't fail them. Something else did. And until we name it correctly, millions of Nigerians will keep avoiding one of the most powerful wealth-building tools on the planet. So let's talk about what actually happened. 2004, the CBN drops a bombshell. Governor Charles Soludo announces that every bank in Nigeria must recapitalize to a minimum of 25 billion naira or shut down. Banks panicked. They needed money fast. So what did they do? They went to the streets, literally. Banks launched aggressive public offer campaigns. Staff were given targets. Adverts were everywhere. Banners, newspapers, radio. Buy shares, get rich, dividends guaranteed. Ordinary Nigerians, market traders, civil servants, teachers, retirees poured their savings in. Some took loans, some sold land, because they'd been promised something that felt real. From 2004 to early 2008, the NGX All-Share Index climbed from around 20,000 points to over 66,000 points. Everyone looked like a genius, paper profits everywhere. Then 2008 happened. The crash wasn't random, it was inevitable. Three things collided at once and wiped people out. 1. The global financial crisis hit. International money that had flooded into emerging markets like Nigeria reversed overnight. Foreign investors pulled out, prices dropped. 2. Margin loans blew up. Many Nigerians hadn't just invested their savings. Stockbrokers had been giving them loans to buy more shares using those same shares as collateral. When prices fell, brokers started force selling to recover their money. That selling pushed prices down further, which triggered more selling, a death spiral. 3. Some of those companies were never solid to begin with. They raised capital in the public offer frenzy, made promises about projects and expansions, collected the money, and never delivered. The dividends they promised were based on projections that assumed the market would keep going up forever. When it didn't, the dividends vanished, and so did some of the companies. Banks like Intercontinental, Oceanic, Afrobank, Finbank, they collapsed or got absorbed. The government had to create AMCON, the Asset Management Corporation of Nigeria, just to clean up the toxic debt mess. So yes, people lost money, real money, generational money. But it wasn't because stocks are a scam. It was because of bad regulation, predatory marketing, over-leveraged brokers, and companies that had no business making the promises they made. Now here's what changed, and this part matters. The SEC Nigeria and the NGX have been overhauled multiple times since 2008. Companies listing on the exchange now face stricter disclosure requirements. Financial statements must meet IFRS standards, which means what you're reading is audited and internationally comparable. The Investment and Securities Act has been updated, giving investors more legal protection and giving regulators sharper teeth against market manipulation and fraud. Margin lending is now heavily regulated. Brokers can't give you unlimited loans on your shares the same way they did in 2007. Dividend policies are now scrutinized. Companies that fail to pay declared dividends face regulatory consequences. And perhaps most importantly, you now have information that ordinary Nigerians in 2006 didn't have. Real-time share prices, annual reports, audited financials, analyst research, tools to actually evaluate whether a company is worth investing in. And the results? Dangote Cement has paid consistent dividends for years. MTN Nigeria has been one of the most reliable dividend-paying stocks on the exchange since listing. BUA Foods, Zenith Bank, Stanbic ITBC, these are companies that have quietly made patient investors wealthier year after year without drama. The NGX All-Share Index is nowhere near where it was in 2008. It's far above it. So what's the real lesson? Your uncle didn't lose money because stocks are bad. He lost money because he bought into a frenzied, unregulated, and poorly marketed offer without understanding what he was buying, without diversification, and in some cases, with borrowed money. That's not investing. That's gambling at the peak of a hype cycle. Real investing is different. It's boring. It's slow. It's consistent. And it works. The Nigerian stock market is not a scam. It never was. What was a scam is how some people sold it to your parents' generation. Don't let their wound become your limitation. If you're serious about learning how to invest in Nigerian stocks the right way, follow Investa. That's what we're here for.